the last 5 days have been bonkers. Currency moves, currency manipulation tags, trade war escalation. If we see a calming of that in the next few sessions, what's going to drive us from here, Michael?
Well, I'm not sure we're going to stay calm for too long.
I said if.
Right. Look, there might be some sort of short-term, what you might call volatility exhaustion setting in, just simply because people have seen, a lot of drama and things are just getting overbought or oversold, depending on what asset you're looking at. But I think there's something right now that's a little bit different than earlier in the year. Right now, investors really have to confront three questions. One, what is the effectiveness of Fed policy to offset trade? We don't know the answer to that.
Is there Fed effect answer that question?
Well, and both economically and in the markets, and I'm guessing that it's a lot less than some people might think it is, right? Some people down in D.C. perhaps. The second question is what is the Chinese response? Like, I think there's been a given by the markets over the last year that Trump can push and he can push and he can push, and then if he wants to, he can suddenly basically come to the table and agree. We don't know that the Chinese are necessarily always going to be doing that.
What is three?
The third thing is that for some time, we've never seen every single major economy in a state of dissent, right? Usually we've seen over the last 10 years, we've seen 2008, 2009, we've seen the U.S. go into crisis, Europe okay, China pretty strong. Scroll forward 2 or 3 years, you saw Europe go into crisis, but China and the U.S. is in recovery, and then in 2015, the China
everything is kind of shaky. Let's wrap it up. What do we do? What do we do with our money right now?
Okay, so it's hard, right? Because rates have rallied so strong. Equities have come in. I think you have to be very careful. I think taking up cash allocations right now. Cash still has a yield on it, and I think that's one obvious thing. I continue to be overweight on the precious metals. I think there's a lot of room to run there.
You're the guy buying gold.
Well, silver yesterday.
Silver yesterday.
I put out a note yesterday recommending a long position in silver, which has a big catch up there. The gold miners and silver have leverage to the gold price there. So I think that's the thing. Now, you obviously don't put your whole portfolio in those assets, but I think that's one way to think about it. I think there will be dip buying here. I just don't think that dip has to get bought, in August.